not just our market, but that global market is unsteady. Let's see how Wall Street is ending the day. Right now, the Dow Jones is finishing about 1,000 points down. The numbers are still fluctuating as those final numbers come in. It did tumble by more than 1,200 points when it opened this morning. It improved as the morning went on, but slipped right back to opening lows this afternoon.
So the big question, what does the market mean for all of us? Michael Armstrong from Armstrong Advisory Group here in Needham joins me now. Thanks for your time. All right, so the investors are worried, Wall Street's worried that the Fed has waited too long to start cutting rates. And this is being driven by unemployment in the U.S. Why are they so concerned about the jobs report?
Well, I mean, first and foremost, 4.3% unemployment, which is what the most recent job report indicated, is not a hugely high rate of unemployment.
It's still pretty low.
It's still fairly low on a historical basis. What we're talking about is the trend, and the trend has been upwards. Specifically, July of last year, we hit a 3.5% unemployment rate. We're now 0.8% higher. And the question is that trend line indicative of a recession? And there's a fairly significant historical SOM rule that took place on Friday indicating recessions in the past.
They said if you're up by more than half a point in the unemployment rate, you have reason to worry.
Effectively, half-month increase in the unemployment rate over a 12-month period is cause for a recession historically.
All right, there's no Fed meeting in August, so the earliest they could take action now is September, barring some emergency rate cut. Do you think that's on the table, given what we've seen not just here, but in Asia and in Europe this morning, or would that only make the market more jittery?
I got to tell you, nothing about this economy right now, in my opinion, speaks to an emergency rate cut, right? You think about the other times where they've had to do that. They collapsed during March of 2020, 08 when banks were failing left, right, and center. This doesn't feel like that moment. Could that change? Yeah, but to your point, it's an emergency rate cut. Is today an emergency based on the stock market that's fallen, 8.5% from its all-time high? That's not emergency, in my opinion.
So last question. I know your advice generally is do nothing in these kinds of scenarios. Were we due for a correction? The market had a pretty good run over the last 6 months to a year.
Yeah, I mean, arguably the level of lack of volatility that we saw in 2023 was abnormally low. Markets, the S&P 500 since the 1920s, 94% of calendar years experience at least a 5% market drop, which is where we are right now. So I think the big question that I always tell people to ask themselves is, have you prepared for a moment like this? Have you thought about what would happen to your portfolio in a moment like this? And if not, that's a reason to take a second look at your portfolio. But otherwise, it might be time to just sit back and turn off the screen for a little bit.